everyone. Welcome to the third in our four-part series, Life as an Investor series, presented by Jane Fund Managers Limited. I'm Diane Chambers, Portfolio Manager at Jane Fund Managers. This week, we'll be focusing on COVID-19's impact on the fixed income market. Today, I have with me Trisha Duval, Manager, Fixed Income Trading, and Christopher Campbell, Manager, Fixed Income Trading. Over the years, more specifically between 2016 to 2019, consumer confidence in Jamaica has been relatively healthy. The index moved from 155 in 2016 to 180 towards the end of 2019. Business confidence has also remained healthy above the 100 threshold. Notwithstanding this, the improving macroeconomic landscape in Jamaica, the coronavirus pandemic is likely to affect companies' bottom line earnings. For this reason, we expect business and consumer confidence to be lower in the first to second quarter of 2020. Trisha, how has COVID-19 impacted the JMD fixed income markets?
Since the onset of the virus in Jamaica, there has been a lot of uncertainty in the market. With numerous businesses closing their doors and individuals out of jobs, the general expectation is that some individuals will need their funds to survive these times. And if we begin to seriously experience the impact of the virus, and by that I mean mass business closures, rising unemployment, declining economic activities, all of this will result in less revenue for the government to fund their expenditures. But despite this worst case scenario, the authorities have been putting in the measures and policies to ensure that there is sufficient funds in the market should the likelihood of a severe hit on the economy occur. For example, the central bank entered the market and was buying back securities from brokers dealers to ensure that they had the necessary funding should the need arise. This initiative injected over 50 billion into the market. So the net effect of all of what I'm saying is that the Jamaican dollar liquidity in the market has increased. And as a result of this, interest rates have declined further. And all of this is a good thing for businesses that are currently struggling and in need of cheap funding to stay afloat.
Thanks, Trisha. Chris, you talk to me now about the impact of this pandemic on the US fixed income market.
Hi, Dan. Given some of the uncertainties that Trisha spoke about earlier and the closing down of borders, what we have seen happening is a fall in bond prices, especially bonds that are considered risky. So bond prices fell. For example, our government of Jamaica securities, in particular, our government of Jamaica 2028, to use an example, last year was trading at 114 or a little above that. Since then, in March, when the virus came to our shores, or even a little bit before that, the prices fell to a par or below par. That's $100 or below $100, right? So we have seen, the market has seen a drastic fall in GOJ bond prices, or in bond prices in generally. On the flip side of that, though, because of the closing down of different sectors, for us, our tourism sector, which is a big income earner, we saw a lack of US dollars to the system. So what happened? Brokers, institutions, in their demand for US dollars, were willing to pay more on money market instruments for USD. So we saw those rates going up.
So what I'm hearing is COVID-19 has created liquidity on the JMD space, but there's a great demand for USD. Trisha, with this vast liquidity in the market right now, as an investor, what should I be looking to invest in right now?
For clients who have the liquidity and the appetite for risk, given the low yields which exist on GOJ, Government of Jamaica instruments, I would recommend corporate bonds. But before anyone invests in corporate bond, there is a key thing I want them to understand, is that these bonds are riskier than the Government of Jamaica instrument. To break it down, the corporate bond market is simply where investors are paid interest to lend money to companies. The instruments are considered riskier than the government bonds, as they are backed by the perceived strength of the company and their ability to pay. And the key to investing in corporate bonds is to ensure that you do your research on the company, If not, you can always rely on the research conducted by GN Fund Managers as we provide comprehensive reports to our clients. And you can always speak to a member of the financial advisory team who will guide you through the process.
Just to add to that, Tricia, the COVID-19 has not impacted the market of corporate instruments that are generally carried at par, which is 100. However, with the far-reaching economic impact of the virus, the potential for defaults could increase. And as such, we could see a lack of new issuances in the short term as companies try to assess the impact of this on their business before going to market. So we could see missed covenants or extension and maturities. The team at Gen Fund Managers continues to perform increased monitoring of the current corporate debt obligations to ensure covenant ratios are above the stipulated levels to proactively spot potential breaches. So as you rightfully said, speak to a financial advisor at Gen Fund Managers. We're a wholesome sweet shop. We can provide everything, the research, the advice, everything. Chris, over back to your side. What options are available for investors in the USD space?
What investors should be doing is sitting down and speaking to their financial advisors about, if I already hold bonds, should I be selling this bond? If I don't hold bonds already, should I be buying more bonds? Do I need to be liquid? So the investor needs to be having a conversation with their financial advisor to direct them in the path that they should be taking. This is what we do at Jane Fund Managers, to guide our clients, to help them to make proper decisions for their investment future.
All right, last question for the team. What if an investor is not interested in bonds? What other options are available right now?
Well, Dan, for those clients who don't have the appetite for bonds at this time, I would recommend investing in more liquid investments, such as your repurchase agreements, which we call repos, or your money market funds, where the risks are lower and there's a greater ease of liquidating or selling these instruments. Basically, it's easier for you to get out of these funds. Repos and money market funds are less risky than bonds, and as such, the investor must expect to get a lower yield than what would obtain on a corporate bond. And for those investors who are just simply looking to build liquidity, an excellent option would be to commit to regular savings in a money market fund, which provides a slightly higher return than our repurchase agreement. And we have the perfect fund for them here at Jane Fund Managers, the local money market fund.
All right, thank you very much, guys. It's indeed an interesting time for all of us as investors. Now more than ever is the time to assess our investment strategy, investment objective, and our investment time horizon. And remember the golden rule of investing. You buy low, you sell high. Please call us at Jane Fund Managers to find out more as we work with you through these challenging times. That's it from us. Tune in next week as we take a look at the stock market and share tips on how you may position yourself to take advantage of the current investment climate. Thanks for listening. Stay safe.